Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today, we're cracking open the annual report of the Goldman Sachs Physical Gold ETF AAAU, and trust me, there's more to it than just shiny gold. Get ready for a few surprises because this report might just have you questioning everything you thought you knew about investing in, well, basically anything. This report is a deep dive into how this ETF performed over the past year, what risks it faces, and where it might be heading. We will look at the real numbers, but more importantly, we'll translate what they mean. First off, let's talk about what this thing actually is. The Goldman Sachs Physical Gold ETF, ticker symbol AAAU, isn't your typical company. It's a trust, meaning it doesn't have employees or even a board of directors. It's basically a big digital vault filled with gold bars, hoping to mimic the price of gold, minus some fees. Think of it as a way to play the gold market without needing a pirate map and shovel. Now, how does this trust make money or lose it? The trust's only ordinary recurring expense is the remuneration due to the sponsor of 0.18% of the net asset value of the trust. The only real expense that this trust takes care of is paying the Goldman Sachs guys their admin fees, which are 0.18% of the value of the gold the trust owns. Basically, they are being paid to babysit gold. The financial wizards have kindly provided us with a handy-dandy table showing how these expenses affect the value of the shares. It's a slow bleed as the trust sells off tiny bits of gold to pay for its upkeep. This is important because it means that the shares comprising a basket will represent a decreasing amount of gold due to the issuance of shares, or the delivery or sale of the trust's gold to pay the sponsor fee or the trust's expenses. What could make this golden goose stop laying eggs? Well, quite a few things actually. The report lays out the doomsday scenarios: getting delisted from the stock exchange, a mass investor revolt, the trustee quitting without a replacement, or even the SEC deciding it's actually an investment company. Here's a little detail that might sting individual investors. The sponsor and the trustee can tweak the rules of the game, the trust agreement, without your permission. Fees could increase or your rights could be altered, though they need to give you 30 days notice before such changes. Speaking of fees, let's talk about the sponsor. Goldman Sachs Asset Management, LP. The sponsor fee accrues daily based on the prior business day's net asset value and is payable in cash from the trust property or the sale of gold in accordance with the trust agreement. The fee is paid on the second business day of each month or as soon as reasonably practicable thereafter in respect of the prior month. If the asset value of the fund increases a whole lot, the sponsor gets paid more. It's a pretty cozy setup for them, and perhaps for you too if you can stomach it. So, where's all this gold actually sitting? JP Morgan Chase Bank, NA London branch is the custodian. They hold the trust's gold bullion. Now, the custodian isn't just throwing bars of gold into a dusty basement. They've got to follow specific protocols, reporting regularly to the trustee about the gold's movement and storage. There are accounts, reports, and a whole electronic dance to keep track of everything. Even the custodian has limits. It may refuse to execute instructions to transfer gold to or from the unallocated account or the allocated account, if in the custodian's opinion they are or may be, or require action which is or may be, contrary to the rules or any applicable law or would constitute a violation of the sanctions. There are rules, laws, and even sanctions that can shut down the whole operation. There are allocated and unallocated gold, which is not something that you would necessarily hear in an everyday business conversation, but that is indeed important here. Allocated gold is stored in a vault under a custody arrangement, and the individual bars are the property of the owner. An unallocated gold account, on the other hand, does not entitle the customer to a particular gold bar, and the customer's holding is not segregated from that of other customers or the custodian. As the gold is not segregated, the customer may have a credit risk exposure to the custodian. This part is important, and I'd advise you to read it twice. To make sure everything is on the level, the sponsor, trustee, and their auditors get to peek into the custodian's vault. This only happens a couple of times a year and has some limitations, but it's good to know someone's checking. Now for the big question, how's gold been doing? The historical price of gold is volatile, and its fluctuations are expected to have a direct impact on the value of the trust's price per share. This is an important thing to keep in mind. But movements in the price of gold in the past and any past or present trends are not a reliable indicator of future movements. This phrase, though common, is especially important here. You might think that how much gold gets mined is the main factor in the price of gold, but it's not that simple. Turns out, governmental decisions can have a big impact. For example, back in 1933, the US government basically forced everyone to hand over their gold. That kind of thing can really shake up the market. Just a reminder, the shares may trade in the secondary market on the SIBO BZX exchange at prices that are lower or higher relative to their net asset value per share. The amount of the discount or premium in the trading price relative to the net asset value per share may be influenced by span non-concurrent/span trading hours between the SIBO BZX exchange and other exchanges. Don't assume you'll always get the true value when buying or selling. Sometimes you might need to look at the trading price relative to the net asset value per share. In today's digital world, even gold isn't safe from hackers. The sponsor relies on Goldman Sachs' cybersecurity policy, which also applies to the trust. Goldman Sachs has established an information security and cybersecurity program administered by Technology Risk within engineering and overseen by Goldman Sachs' Chief Information Officer. The program is designed to identify, assess, document, and mitigate threats, establish and evaluate compliance with information security mandates, adopt and apply the security control framework, and prevent, detect, and respond to security incidents. A dedicated operational risk team provides oversight of the cybersecurity program, independent of technology risk, and assesses the operating effectiveness of the program against industry, standard frameworks, and risk appetite-approved operational risk limits and thresholds. There you have it. Alright, let's look at the numbers to see how the Goldman Sachs Physical Gold ETF did in 2024. The fund had a net asset value of $889,603,323 at the end of last year, 2024. Each share was priced at $25.81. For 2024, each share had total return at net asset value of 26.33%. This section includes audit-related expenses. These are the costs incurred by the company to pay the external auditors for performing checks, audits, and any work needed to make sure that the numbers in the book are correct. A total of $116,000 in audit fees was paid in 2024. As a final check, the accounting firm PricewaterhouseCoopers gave the Goldman Sachs Physical Gold ETF a thumbs up, stating that the financial statements present fairly in all material respects the financial position of the trust as of December 31, 2024 and 2023. The trust agrees to protect its managers from various potential expenses such as legal fees, liabilities, and losses. The liabilities must be incurred without any reckless regard of their obligations and duties. This would be very costly for the fund if such a situation occurs. So what's our take after this deep dive? On the one hand, this ETF looks like a straightforward way to invest in gold. It's transparent, the gold is supposedly secured, and you get the benefit of Goldman Sachs and JP Morgan's infrastructure. However, remember that you are not truly in control of the gold, because they can make amendments without your permission, and there can be situations such as governmental decisions that can affect the price of the gold. As always, if you found this helpful, hit that like button, drop a comment with your thoughts, and don't forget to subscribe for more corporate deep dives. Until next time.